equity market suffered steep losses as Bitcoin, Ether, and Solana stumbled in a broad sell-off driven by investor caution ahead of the U.S. non-farm payrolls report. Bitcoin slipped sharply as traders repositioned for potential signals on inflation, interest rates, and liquidity conditions. Ether and Solana also recorded double-digit declines, with altcoins facing intensified volatility due to leverage liquidation and shrinking risk appetite. Analysts say the market is reacting to fears that strong U.S. job data could delay expected rate cuts, tightening financial conditions. The downturn highlights crypto's sensitivity to macroeconomic indicators and investor sentiment, especially during periods of policy uncertainty. Solomon Amunde, co-founder Sasomis Crypto, joins us now. Good morning. Solomon, are you with us?
Yes, I can hear you.
All right, great. So we saw sharp sell-offs in the likes of Bitcoin, Ether, Solana, major crypto assets. What's triggering this sharp sell-off ahead of U.S. payroll data release?
All right, so first, Bitcoin and Ethereum are actually very weak at the moment because we've broken through multiple support zones and it's most likely on a free fall right now. So immediately we went below the last strong support we had, which was about $94,000. Most persons just had to start selling off, anticipating the news we should be expecting on Thursday. And they are actually expecting that news to be bearish. And the truth is they were not wrong to actually sell off because the asset class has been very, very weak and it has been bearish for almost 3 to 4 weeks now.
Mm-hmm. And how significant is perhaps the link? I know you have established some of the link, but how significant is the link between macroeconomic indicators like U.S. job numbers and the likes to what is happening now with crypto?
It's actually very, very significant. At least we've seen that over the years. Whenever there is a rate cut, it influences the crypto market positively. We then see the market pump. And also earlier this year, where we saw the stock market crash and S&P 500 also crash to its all-time low in over 5 years, we also saw the crypto markets crash aggressively too. And just this month, we've seen S&P 500 witness its worst month since the dump that we saw in the month of, I think, March this year. This month is actually its worst month after that month. So it's only fair too that we expect a similar thing to happen with the crypto market, especially when you factor in the fact that the S&P 500 market is quite bigger and the stock market too is very big. So we saw S&P 500 crash. We saw NASDAQ too also crash. I think NAS 100 and NAS 30. They also crashed, losing significant percentage. So it's only wise and fair for smart investors to pull some money out of Bitcoin and also Ethereum and some other crypto assets. So this asset class are actually strongly correlated.
And let's see, who is selling? Is it the institutional investors driving this latest crypto decline, or is it the retail side, perhaps panic selling?
I feel it's a bit of both. Because for the ETFs, we've seen large outflows on Bitcoin ETFs. Like we've been seeing constant outflows, 200 million, 400 million, 500 million. There's been constant sell-off based on the BTC ETF. So you can see that the big money investors are also pulling out, trying to play it very, very safe. And another very fundamental factor too is the fact that the US government has been down. It's been shut down for over 43 days now. Think about 43 days. And we are yet to see any rate cut for the longest period of time, which I think Trump had to renew hopes yesterday by dropping a tweet about a replacement that he would have once he fires the new Fed chair. Yeah, so most persons saw that as good news, but you can't be certain when we would see any rate cuts or when the US government would resume its operation. So based on that, the market has just been on a downtrend ever since then.
And even though they have officially ended the shutdown, at least within the House of Reps, hopefully that we begin to see things back in full swing. But looking at, we know that crypto, particularly that asset, there have been attempts to sell it as a financial asset class. Are we there yet?
I think we're almost there yet. Maximum, I would say, in about 6 months, we should be there. And the fact that we've seen lots of Bitcoin ETFs, we are beginning to see other crypto assets ETFs now to like Solana, Litecoin, SRP, and a few others. It's only fair to say that it has gotten to that point where institutional investors are very much okay with the asset class, and over time, we will also start seeing some banks to
All right, you're giving it 6
have
months.
custody over these assets and also expose their clients to investment. Yeah, over time we'll see some banks also give custody to crypto assets. We already saw one of the sons of Donald Trump, I think Eric Trump, he said that very soon banks would also support cryptocurrencies. And the truth is, if the US banks start supporting cryptocurrencies, you can store your Bitcoin, Ethereum, and others in your banks, then trust me, other countries will have to follow. They'll just fall in line. It's just a natural order of things.
Interesting. But we know Trump is a big talker, so we'll see how all of that pans out. Coming to crypto exchanges, how are they responding to this heightened volatility?
Well, for crypto exchanges, they don't really have any problems. The reason is they make their money from fees. Either the market is going up or down, they're making their money from fees. What's of utmost concern to them is the volume. As long as they still have like good volumes, they don't have problem. Either way, they are making money. And crypto has matured to that point where we have insane volume now. Like from what we had over 5 years ago, and as at 2017, 2018, if you look at the volumes right now, it has done more than times 10, times 20. Once upon a time, we used to have $1 billion volume on exchanges. Now we have over $20, $30 billion volume easily on exchanges. But there was a time where centralized exchanges used to celebrate $1 billion volume. But right now, they easily do $20 billion volume. And in a month, they can rack up as much as over $400 billion volume. So they don't really have much problems. Yeah.
Yeah. And I mean, looking at the perhaps opportunity in all of this, should investors buy more? Is this a good time for new investors to come in? Or is this just a signal of the deeper market weakness with that asset class?
I think it's very, very okay for investors to jump into Bitcoin or Ethereum or any of the top cryptocurrencies at this point in time. Now, I say this majorly because we've seen corrections. And it's when you get those corrections that it's best to jump in. At least Bitcoin has corrected by, say, 33% from its all-time high of about $126,000. That's corrected about 90K, which is at least 30%. So for any asset class, when you see a 30% correction, 40% correction, it's good for you to start jumping in. You don't need to wait till you see 50% correction. You can gradually start to DCA your way into that asset. The most important thing is that the asset will still go back up and it's even still making the all-time high. So I think it's perfectly good for investors to jump into the crypto ecosystem now.
And let's take a look now at stablecoins. They have quite the appeal to sovereigns. How are they performing amid the latest crypto market turbulence?
Well, stablecoins have been performing very, very well, like we will, especially based on the doors and opportunities that they have opened up. So we have lots of companies, lots of startups that are utilizing stablecoins to solve lots of problems, including like cross-border payment issues. So we have like lots of startups currently that their products are actually live. You can use them to like fast track your transactions, make cross-border payments to almost any country in as little as 2 minutes to 3 minutes. So I would say stablecoins have been very, very instrumental, very, very useful. And now even Web2 platforms are using them as a medium to be able to settle and carry out fast transactions and cross-border payments without the users knowing what is happening behind the scene, but still enjoying the benefits of those fast cross-border transactions and payments. So I would say stablecoins have been largely successful. they've actually been one of the most successful aspects of cryptocurrencies, and they have actually been that has provided the most utility for most users if you look at it from a particular direction. Yeah, so they've been doing very well. Yeah.
Okay, and finally, with everything going on right now, what is the strategy for someone who perhaps holds, the coin?
Which of the coin do you mean, all cryptocurrencies?
Crypto, the assets, yeah.
Okay, so it all depends on which of the crypto assets the users are holding. But my advice is this is the best time to load up your bags gradually, not aggressively. And also people should do well to focus on the solid cryptocurrencies, because these days we have lots of highly volatile cryptocurrencies that can crash.
So you said this is the best time to do what? You said this is
actually the best time. This is actually the best time for those interested to start accumulating by practicing DCA, and most importantly, focusing on the solid cryptocurrencies, because these days we have millions of cryptocurrencies and most of them can crash as much as 90-95% and will most likely never bounce back. So it's best you focus on the solid ones, the established ones, and the ones that have a product and revenue system. Very, very important. It's not just by buying any random cryptocurrency. You need to know which one you're buying and ensure that you're buying the right one.
All right. Thank you so much for your time and perspective on the show today. Solomon Amunde, co-founder, Sasomis Crypto.
Thank you very much.